Hey everyone, it's Tom Kratz, and hopefully you're doing well out there. This week we wanted to share some economic data that we're looking at. And as this evolves, this health pandemic evolves and basically shut down the global economy, we want to look at some of the debt situation going on in the world and why as Canadians we should pay attention to this stuff. And I know in a day-to-day situation we're all just trying to survive and get through things with our own families, but there is a global economic picture that definitely impacts us here in Canada that I think we need to be aware of. So I'm just going to minimize myself over here. And I want to start by going over to Canada.ca, and this is Canada's COVID-19 Economic Response Plan. So today I just really want to share some of the data that Nick and I are looking at as all of this evolves. And the Canada, and before I forget actually, at the end of this I'm going to share some books, both economic books or books on the economy and books on personal development that might be useful to you, that definitely have been useful in our lives. So if you stick around to the end, we will share that with you. So on Canada.ca, there are all the different programs listed that Canada is doing to support the economy during this time. And one of the things is supporting the financial stability of the country. And there's this comment here from the Bank of Canada, and it kind of reads out, the Bank of Canada is acting in several ways to support the economy and the financial system and stands ready to take any and all actions that it can to protect the well-being of Canadians during this difficult time. So interesting sentence, doesn't really say too much, but the next sentence is pretty insightful. It says, the bank has responded by lowering interest rates, which they have, definitely, intervening to support key financial markets, and providing liquidity support for financial institutions. So the liquidity support we definitely know. They mentioned that they're going to purchase $150 billion in mortgages on the mortgage market to offer the bank some liquidity during these times. But this is an interesting comment here, that they're intervening to support key financial markets. What exactly does that mean? Are they buying in the stock market? Are they buying in the bond market? Are they selling? Like, what exactly are they doing? And there's not really many details about it, but it gives us a clue into how serious of a situation this is when right on Canada.ca, the Bank of Canada is listing that they are intervening in key financial markets. So that's pretty interesting. It gives us a clue as to the size and depth of the situation going on in the Canadian economy right now. That is not normally a thing the Bank of Canada is going to be doing. And then on the purchases that they're making to provide liquidity, I think the main headline was the $150 billion that they were going to do. But there's also this here. Let me move myself more into the corner over here. Check this out. This is on bankofcanada.ca. It's a press release on Monday, March 16th. And they said back then that they were going to start doing purchases of $500 million per week. And this is to support the Canada mortgage bond market. So they're going to be doing $500 million per week. So we heard about the $150 billion, but if they're also doing this at the same time, that's $500 million a week or another $2 billion a month. And there's no real end time for this. So does that mean we're doing $150 billion and $2 billion extra a month, just kind of forever or until further notice? That's kind of what it looks like to us. And it's just another clue that there is really some support needed in the financial markets here for the Bank of Canada to be doing these kinds of actions. Like, that's $2 billion a month in the Canadian mortgage bond market that they are supporting. So we're looking at that kind of stuff. And then we look at this kind of stuff over here, which gives us a clue into what's going on in the world. And when you look at some of this stuff, so this is from the Institute of International Finance. You can kind of Google this up yourself. The website is iif.com. And right here on April 6th, so this is current information on April 6th, they have this document here that talks about the amount of debt that is in the world right now. And it says here that global debt across all sectors rose by 10 trillion in 2019, topping 255 trillion as a total, or 87 trillion more since the financial crisis of 2007, 2008. So we have $255 trillion in global debt. And I'm going to try and bring this home in a second for you, but I just want to show you something here. There's a chart that they published here, and it's really interesting because if you notice, there in 2007, which is the middle bars in these categories here, that is the amount of debt that these different sectors had. And if you look at the change from 2007 to 2019, The financial sector didn't really change too much, neither did the household sector. But look at the government sector and non-financial corporations, so like, regular businesses. They all took on a lot more debt. These two categories, it seems to me, couldn't take on more debt since 2008, but these guys stepped in to take on more debt. So that just naturally leads me to a question is, who's going to step in next to take on more debt? If the government's already taken on this much debt since the last crisis, are they going to do this much again? And we'll talk about that at another time. But the point that that really stuck out on this document for us was this: refinancing risk alert. Over $20 trillion of global bonds and loans come due through the end of 2020. So think about that. Over $20 trillion worth of bonds and loans come due through the end of 2020. That means there's a lot of different organizations. The province of Ontario borrows sometimes in US dollars. Different countries borrow money. Different corporations borrow money. Some of that is coming due to the tune of $20 trillion this year. So my question is, in a time of economic crisis that exists definitely right now, is that just going to be rolled over? Or the people that lent this money, are they going to say, hold on a second, you know what? I need that money myself, give it back to me. And where are all the people that borrowed that 20 trillion going to get the money to pay it back at a time when revenues are down both for governments and for the overall GDP of a country? So this is when we all hear about a US dollar rush or a shortage of US dollars, because so much of this is borrowed in US dollars. This to us is one of the reasons why there's going to be a rush to US dollars over the next little while as people try to handle this payment back of some of this debt that is owed that is coming due this year. So to us, this means the financial sector is definitely going to be under stress for the rest of this year. And it's going to require quite a lot of liquidity to support that. So something else then we look at is that Canada, each province in Canada, and this is, by the way, this is off commodity.com. So commodity.com, let me scroll right to the top. Commodity.com has this great page, and it says Canadian national debt explained. Is prolific borrowing a wise economic strategy? And it kind of goes through some data here. But the most interesting thing to me in all of this right now was that the governments in the provinces are borrowing in US dollars. Right? It says right here, Ontario's debt instruments are issued as shown below in order of magnitude. And they are borrowing to the tune of $40 billion Canadian. That's the equivalent amount that they're borrowing in US dollars, which means that even the province of Ontario might have some of this debt coming due this year. Who knows that they then are going to have to repay back. So this is widespread, this whole debt situation that is happening over this year with this $20 trillion worth of global debt that needs to be refinanced. And it's not just this kind of nebulous thing out there. It's the province of Ontario borrows money in US dollars, and who knows, maybe they're going to have to raise US dollars to pay some of that back. So then we look over here, and this is one of my favorite slides. It's from a financial kind of investment house called Incremental, and they have had this chart for a long time. And it basically, on this chart, it kind of just shows you that the total credit market debt is going up every year. And it kind of had this blip in the financial crisis, but then it continued to go up. And it's an interesting chart, but the line in here that really strikes me is this right here. It says, there is no reverse gear in the monetary system. If money supply and credit don't continually rise, the system's situation grows critical. To me, that's a great summary of what is happening in the world right now. There has to be a continuous supply of new debt in the world. Otherwise, the system, the way that it's built, can't survive. So when I see $20 trillion of global debt that is coming due this year, to me, it means if those provinces, companies, foreign countries that have borrowed that money can't pay that back, someone somewhere is going to have to step in and give a lot of money or print a lot of money for this stuff to continue to increase. Because the system, just as it says here, there is no reverse gear in the monetary system. If money supply and credit don't continually rise, the system situation grows critical. So when I see stuff over here like this is from the cbc.ca. So interest rates are plunging, so why aren't mortgage rates? Bond yields and central bank rates have never been lower, but not all the savings are filtering down. And this was from April 4th. And there's definitely some truth to this. If you've been following interest rates here in Canada, the variable rate or the bank prime rate has dropped down to 2.45%. However, some of the discounts that banks have been offering on variable rate mortgages are going away, meaning that if 2 months ago you were able to get a variable rate at bank prime, 2.45% minus, let's say, 0.5, that maybe is not available to you anymore. And if you're getting a new variable rate mortgage, it's 2.45% plus something perhaps even. So the banking system and fixed rates have been trending up over the last little while here, the last week, 2 weeks. So there is some truth to this, that banks are getting tighter with their lending. This goes back to what we discussed last week in one of the Rockstar Minutes, where we discussed how there's going to be this epic battle in our future where banks are going to continue to tighten. It should be no surprise in an economic environment like this. Banks, we feel, are definitely going to continue to tighten. But there's going to be this battle where governments kind of step up and the banks kind of step up, and they have this standoff where the government's going to try and force the banks to lend. Because remember, the system's situation grows critical if the supply of credit does not continually increase. So as the bank tightens its lending, at some point, the government is going to step in and try to get the lending moving again. And this is why in the near term, we think there could be some deflationary pressures, meaning the prices of things all around us may be pushed down because there's no economic activity, no one's really doing much right now, and the access to credit is declining a little bit right now. So that means there could be some deflationary pressures on all the markets in our economy right now, for sure. And it will be the policy response to this battle between governments and the banks that really decides if inflation takes off or not after that period. So this is something we're watching really closely. And if you want some resources for yourself, I mentioned I was going to share some books. This is a good one by one of our favorite analysts, James Rickards. This is Aftermath. He actually has a whole series of books. A bunch of them are down here: Currency Wars, The Death of Money, The New Case for Gold, The Road to Ruin. That, I believe, is his latest one, Aftermath. That's a great read. It explains the economy, I feel, in a really, really well laid out contextual framework. Another book, this is an original. This book was published, I feel, back in like 2005 or 6 or 7. Mike Maloney has a great YouTube series on the hidden secrets of money that everybody should check out if you haven't checked that out. But this book, when we first got it, was more than a guide to investing in gold and silver. He did a really good job of explaining how the economy works. So don't be fooled kind of by the title of this book. He does a great job in here on breaking down how the economy works. It really helped us out greatly in our own understanding. For a while, you couldn't even buy this book, and it was gone for a few years, but now it's back on Amazon and you can get that book. Another book, if you really want to go deep, is The Creature from Jekyll Island. So this book is like this thick. Most people don't really like the book. I love the book. I think it's an amazing read. I read it like a mystery novel. It was just like fascinating to me. I see there's also the audiobook version of it now, so maybe that'll be easier. I'm not sure who's reading that book. But the hardcover there is available, and it looks like they're actually pricier than they used to be, $74. I guess this is on the resale market. It's not Amazon directly. Wow. Okay, so maybe the audio is the way to go on that book. And then just to summarize some of the economic stuff, this is still to us the best summary. We shared this before, that even if there are deflationary pressures in our future and prices of things could be pushed down, eventually the government is going to respond aggressively. And we think that response is going to make today's stimulus that we're seeing on Canada.ca perhaps look tiny. I mean, we don't have a crystal ball. I'm sure you're just as interested to see what happens in the future as we are. But we think that there's a strong possibility when a lot of this debt starts maturing over this year and then next year, this $255 trillion dollars in global debt, someone's going to have to step in and print some money to kind of have that debt roll over. So when that happens, that's when inflation can possibly take off. And this is the question that we asked James Rickards a couple weeks ago now. It said, in a world where the US dollar does devalue 50 to 80%, is that in relation to literally everything? Groceries, property, rent, just trying to wrap my head around it. And he says, yes. And you can't look at other currencies because they're all in the same boat. You have to look at land, gold, and tangible goods. And this is why we believe hard assets is the way to go. And we still think long-term, it's the way to go. And not even long-term, we think medium and long-term. In the short term, it just might be difficult as the banks tighten things to get hard assets, but we believe that doesn't mean you should not have them in your life. Don't wait until you need hard assets as part of your family's net worth. You want to be getting them while you can get them. And to us, I feel like I always get roasted if I say something like this, but whenever the market kind of opens up and you feel comfortable if it's time for you, if your basics are met, you have enough emergency cash to support your family and your life, you do want some hard assets in your life, definitely. So now I promised I would share some other books, some kind of personal development books here as well. Let me just kind of make this screen a little bigger and so you can see some of this stuff. So here are some of them. So here, I'm going to start with some classics. This one, definitely Think and Grow Rich. I mean, we read this a long time ago. It's an old book, but if you haven't read it, definitely worth your time. And in these times, one of my favorite books, actually, How to Stop Worrying and Start Living by Dale Carnegie. So Dale Carnegie is probably best known for his How to Win Friends and Influence People book. This is also an absolutely great read. So those are older books. If you want some more, some modern stuff or newer stuff, one of our favorites is Robin Sharma, his 5 a.m. Club, great read. It just talks about putting the habits in your life that really can produce the results that you need and want for yourself. So absolutely great read. And another one that's one of our, to us an all-time classic, even though it's not that old, is The War of Art. The War of Art by Stephen Pressfield. It just talks, if you're struggling in any capacity to get things done, this is just a great book to break that mental barrier and get stuff done. So there you have it. That's some of the current economic news that we're looking at. Hopefully you find that useful. We'll continue sharing these Rockstar Minutes as we get good information. Stay well out there, everyone. Be good and talk to you soon.